about way cash crisis works.
Talking about Venezuela once again.
Systemic important thanks. They removed the one factor you do this thing here called monetary awareness. Hey there, hope all is well. Back at you today with some more RT News updates. And as you can tell from today's title, inflation on the rise puts pressure on the Fed. I'm going to cover about 6 or 7 articles dealing with the subject matter of inflation and the headlines, and also how the Federal Reserve Chairman, or newly elected Federal Reserve Chairman, Jerome Powell, be in the hot seat this year as to whether or not the Fed is actually able to live up to their promise of raising interest rates at least 3 times as inflation continues to reach the tipping point of the Federal Reserve 2% mandate. And as always, before I actually dive into today's articles, I want to encourage you to join me tonight for RTD Live Talk at 9:30 Eastern Standard Time, where we're going to cover the subject matter of inflation, as well as whatever matters are on your mind that's worth discussing about events happening in this monetary world we're living in. And also, before we move any further, if you're new to RTD, I want to encourage you to click the subscribe button for more RT News updates, as well as live talks, as well as interviews. And if you're new to Rethinking a Dollar altogether, I want to encourage you to visit the RTD University page, where I put together all my prior interviews dealing with subject matters such as inflation, monetary policy, as well as the importance of precious metals in your possession right now. So I want to encourage you to take a minute, scroll down to the very bottom of this video here and click that tab there, and have a chance to view over 30+ hours of commentary from author, economists, you name it. So without further ado, let's dive into today's articles. So as I mentioned, I have about 7 or so articles I want to share with you, and the goal is to just scan over the surface, give you something to think about, and then also the links will be down low so you can go into them further for yourself to find out more what's going on. But ultimately, the idea and the theme you're going to see is the fact that there's a lot of commentary on the idea that inflation is increasing due to the fact that prices of goods and services are rising. In actuality, the purchasing power of the dollar is depreciating or going down, as you can see from this image around me, where we have a basket of goods and it says silently robbing you of your purchasing power since 1913. So ultimately, it's the Federal Reserve that's behind all of this, and the fact that the United States government is in need of so much money that they're borrowing more than they can ever pay back. And so the Fed is forced to continue to expand the monetary supply, which means that there's only a finite amount of goods and services, but there's an unlimited supply of Federal Reserve notes, as well as the digital notes floating around. So let's dive into today's articles. And as always, leave your comments and thoughts. And if you find this informative, which I'm sure you should, I want you to share this with your family and friends so they can get more in tuned onto these matters. So let's dive into these articles. Very first one here is inflation rose faster than expected in January. And this is from Money CNN. Next one here is from CNBC, and it says consumer prices jump much more than forecast, sparking inflation fears. The next one here is from Reuters. It says, what inflation? Apple and Facebook drive Wall Street rally. The next one here is from Reuters as well. It says, rising U.S. inflation puts spotlight on Fed's Powell. Next one here is from CNBC, and it says, rising inflation rekindles a big market fear from the 1970s. Next one here is from Bloomberg Markets, and it says, U.S. CPI tops estimates as apparel costs jump most in 30 years. Next one here is from Barron's. It says, Dow drops as too much inflation rocks stocks. And then the very last one here is an actual piece on the great inflation of the 1970s from Investopedia, and it gives you an idea as to how we arrived at this point. It has a lot to do with the idea of a lot of easy money floating around. So let's dive into the very first one. So just to give an idea what's going on here, there's a video here of this gentleman here sharing his thoughts on the fluctuations in the stock market. But more importantly, give you an idea here, it says the consumer price index, a key indicator of inflation trends, jumped 0.5% in January, well above market expectations. It says market reacted sharply to the news with stocks sliding and government bond yields rising. It says the Fed is watching inflation closely, so the report could add fuel to interest rates hikes. Scroll down a little bit more, see what's going on here. We have a graph here. Scroll down some more. It says headline CPI rose 2.1% on an annualized basis against expectations of 1.9%. It says core CPI increased 1.6% versus estimates of 1.7%. It says investors are watching the report closely as fears of surging inflation help send the stock market lower and bond yields higher. So here you have a guy here buying some salt. It says overall, we think the increase in core CPI inflation in January is a sign of things to come over the rest of this year, said Michael Pierce, senior U.S. economist at Capital Economics. And so the idea that we are already starting the year off, and there's a lot of people out here concerned over the idea of the price of goods and services increasing. Next one here, it says, what inflation? Apple and Facebook drives Wall Street rally. So basically saying here that because the stock market is going up, we have Facebook and Amazon as all-time highs. And along with that, the fact that a lot of people are concerned with the idea that this Federal Reserve interest rate hike is coming in March, and it's all subject to how this inflation stuff plays out. If the numbers aren't what the Fed expects, they're going to have to make a decision as to whether or not they live up to their promise of hiking continuously this year, or if they have to not hike, which is going to cause more problems because it's going to make them look very incompetent in doing their job. And so if you're interested, there's more information here, but just give you some graphs and things like that. Next one here. Rising U.S. inflation puts spotlight on Fed's Powell. So here we have some shoppers here. There's a video if you're interested, but it basically gives an idea as how the retail sector, as far as retail consumer prices in regards to clothing, is down. And so because people aren't really buying as much and the prices are going up, give you an idea what's going on here. It says, while we have been looking for inflation to firm, we think last month's increase probably overstates the underlying trend, says Michael Farrelly, an economist at JP Morgan. Says today's inflation reading should probably cement in place the Fed's intent to hike rates at the March meeting. We now also think the odds are moving up that they also revise their guidance as a meeting from looking for 3 hikes this year to 4, aligning with our view. It says Labor Department said its consumer price index rose 0.5% last month. Households paid more for gasoline, rental accommodations, and health care. The CPI rose 0.2% in December. The year-on-year increase in the CPI was unchanged at 2.1%. So the idea that people are spending more for gas, more for rent, and more for health care lets you know that ultimately the dollar doesn't purchase much, or the Federal Reserve doesn't really purchase as much as it used to. Next one here. Rising inflation rekindles a big market fear from the 1970s. And so that very last article I'm going to share with you talks about the whole inflation that happened in the 1970s. And so give you an idea what that's about, it goes here. The 2.8% January rise in the consumer price index pushes the economy toward a potential danger zone for inflation. It says a combination of rising prices, pressures, and weakening growth would be a sign of a stagflation, a fear from the 1970s. Fed economists expect GDP to grow 2.5% in 2018, though the Atlanta Fed has sharply cut its projection for the first quarter. So here this article pretty much hints at some things that are similar to the development of the 1970s, where inflation was through the roof. So more details here if you're interested in finding out more for yourself. Very next one here is U.S. CPI tops estimates as apparel cost jumps most in 30 years. Says core gauge advances 0.3% from prior month, above projections. Apparel index rises 1.7%, most in almost 3 decades. So the idea that clothing is going up. Here we have a graph here showing the inflation on the rise. So here it talks about retail sales. A separate report showed U.S. retail sales unexpectedly failed in January and December. Figures were revised downward, suggesting consumer spending is on a slower track in the first quarter. So the idea, or people aren't really buying clothes the way they have, and it has to do with the idea that prices on those typical goods and services are going up. And so here we have some more information on the Fed outlook and what's expected for March and some things that they possibly might do. And then what's more intriguing about this article here is the fact it says, gives you some details on actual adjustments in a cost. It says wireless phone services prices fell 0.2%. It says used vehicle prices posted a 0.4% increase last month. The price of airfares fell 0.6%, the third straight drop. Cost of lodging away from home fell 2%. Average hourly earnings adjusted for inflation rose 0.8%. But the very next one, last one here, is the great inflation of the 1970s. And so this is what the article prior to was hinting at, in the fact that it says that in the 1970s, the stock market is a mess. It said it loses 40% in an 18-month period, and for close to a decade, few people want anything to do with stocks. It says economic growth is weak, and the results in rising unemployment that eventually reach double digits. It says the easy money policies of the American Central Bank, which are designated to generate full employment by the early 1970s, also caused high inflation. The central bank, under different leadership, will later reverse its policy, raising interest rates to some 20%, a number once considered usurious. For interest-sensitive industries such as housing, cars, rising interest rates cause a calamity. With interest rates skyrocketing, many people are priced out of new cars and homes. And that's kind of how this is all going to play out, in my opinion. So as you see here, there's talk and mention of the idea that inflation, or just the cost of goods and services, spiked up, very small percentages, While the Federal Reserve had their back against the wall, needing to make some major decisions this year because they've been preaching the narrative that our economy is strong, we're growing. And so the idea that the inflation is going to make them have to choose whether or not they're going to live up to their promises of raising the interest rates at least 4 times this year, as they always mention they want to do. So last year we only had, I think it was 1 at the very end of the year. And so the goal now is to see if they're going to really live up to their words, or if they're going to continue to make a fool of themselves and saying that the economy is strong while actually not doing anything as far as their own policies to prove it. And so at the end of the day, as you see this basket of goods around me, is what is most important to you and I is the fact that it's the Federal Reserve notes, or the currency we're using, that's under attack right now. And so the idea that you can no longer purchase a full basket of goods here for $20 lets you know that you can imagine, say, 1 year, 2 year, 3 years, there's going to be a lot more talk on inflation being well beyond that 2% mandate. And at that point, they're probably going to either adjust their own inflation target to say 3 or 4% for a healthy economy, as they're going to put it. In actuality, what that means is that's 2, 3, 4% less purchasing power, or the devaluation of your currency by 2, 3, 4%. You're going to get less bang for your buck at the end of the day. So something worth keeping in mind is the idea that we can expect prices to go up at the gas pump, as well as clothes continue to rise, as well as everything that you and I need to function is going to go up. So I just want to shine some light on the subject of inflation. I'd love to hear your thoughts. Also, join me tonight so we can talk about this subject matter here at 9:30 Eastern Standard Time. Share this information so people can join us tonight and become more aware of the subject matter of inflation and how the Federal Reserve notes they're holding in their possession will not, in the long run, be of much use if it doesn't purchase anything. So, other than that, see you tonight. Thanks.